Hey traders, Mike Sir here. Welcome back to my channel. In the financial markets, there are literally hundreds of different technical indicators out there that can help you analyze the markets, but which ones should you use and why? Well, in this video, I'm going to share with you 3 technical indicators that I use on a daily basis to identify opportunities in the markets and show you how I use them. So let's get started. So first off, let me explain to you what technical indicators are. They are a visual tool added onto price charts that help illustrate various aspects of the price action of a stock. So basically, the majority of technical indicators out there derive their data from price and present it in a way that you can determine the price direction of a stock and the price momentum. Now, the benefit is it is a way to help you judge when you should consider buying or selling a stock. Now, some traders will say technical indicators are lagging signals because by the time the indicator gives you a signal, it's just too late. Well, these traders are right, but what technical indicators help you is similar to any other technical tools out there. They give you a warning to buy or sell, and sometimes the warning is a bit too late. As I mentioned, there are literally hundreds of technical indicators out there, but let me share with you 3 technical indicators that I use. Now, the first technical indicator that I'm going to talk about is called the Relative Strength Index, or commonly referred to as the RSI. Now, the RSI is a momentum indicator that compares the magnitude of recent gains to recent losses. It's essentially used to determine whether a stock is overbought or oversold. And typically, RSI price ranges from 0 to 100. A stock is considered overbought once the RSI reaches the 70 level or higher, and also a stock is considered oversold once the RSI reaches the 30 level or lower. So here's a chart showing the RSI technical indicator. So you can see there here, this is the RSI technical indicator here. And you can see the 70 level and also the 30 level. So if the RSI reaches 70 or higher, that means that the stock may become overvalued and maybe you want to consider selling. And definitely you should not be buying the stock at this time. And also if you see the RSI reach 30 or lower, this means that the stock may become undervalued and you may want to consider buying. But what you shouldn't be doing is you shouldn't be selling or shorting the stock at this time. So if you look at this chart here, if we look at here, getting close to 70, you can see 70 level, the price starts to go down. When it reaches below the 30 level, you can see that it goes up here, 30, up. And then right here below 20, you can see that the price is very, very oversold and then keeps going up here. Same thing here, oversold. And you look to buy here, and you can also see here as well. As it gets very, very overbought, then it goes down. Now, the RSI is not always the most accurate predictor of a stock reversing, mainly because the stock price can stay overbought or oversold for a long period of time. Before I share more technical indicators with you, please stick around to the end of the video as I will randomly pick several charts. I'll analyze them using the 3 indicators and tell you what price direction that it's going to go towards. Okay, let's talk about the second technical indicator that I use, and it's called Moving Average Convergence Divergence, or simply called MACD. Now, MACD is also a momentum indicator that shows the relationship between 2 moving averages of prices. So basically, it compares a short-term average versus the long-term average of the stock's price. And it's mainly used to determine whether a stock is moving in the upward or downward momentum. So for the MACD indicator, you want to look for a move above or below the 0 line. When the MACD is above 0, this means that the short-term price average is above the long-term price average, which basically signals that the price is in an upward momentum. This also means in the short term, the stock price is moving higher than the long-term price average. When the MACD is below 0, this means that the short-term price average is below the long-term price average, which signals that the price is in a downward momentum. This also means that in the short term, the stock price is moving lower than the long-term price average. So here's a chart showing the MACD technical indicator. So the MACD technical indicator is basically right here, between 1 and -1. Now, what I like to do is I like using the MACD histogram instead of the MACD line. So what you can do is you can see here that there is a zero line right in between here. And essentially is that if you see the MACD break above the zero line and keep rising, then this means that in the short term, prices are rising and signaling an upward momentum. And this will give you confidence to buy because it's signaling that price momentum is towards the upside. If you see the MACD break below the zero line and keep falling, then this means that in the short term, prices are falling and signaling downward momentum. And this will give you the confidence to sell or short because it's signaling that price momentum is towards the downside. So let's take a look at this chart here. So you can see here that this is positive momentum here. And then when it crosses the zero line here, you can see all the way into the red, you can see that actually the price go on a downward momentum. And then when it crosses the zero line here and turns green, you can see that the prices actually move up. Now in this case, it actually didn't move that much. But then you can see here, once the positive momentum or upward momentum is over and it changes into a negative momentum, you can see the downward momentum here. And again, same thing here. The negative momentum or the downward momentum is slowing down. And you can see it shift and cross the zero line and actually become an upward momentum, and you can see the price rise there. Now the MACD is not a good predictor of when to buy or sell, but what it should mainly be used is to determine the price momentum of a stock. So if the price momentum is strong towards the upside, then you should feel confident that the price should continue going up. Or if the price momentum is getting weak towards the upside, then you should look to sell the stock before it reverses. The third technical indicator that I use is volume. And I've covered this actually in detail already in the BNF Trader video, which you can watch in the top right hand corner. And what I'll do is also include it at the end of this video. Before I use the 3 technical indicators to analyze some charts for you, please take a moment to like this video. I would really appreciate your support. Okay, let's take a look at some charts together and analyze the charts utilizing the 3 technical indicators. Here's a chart of Uber Technologies. So let's take a look at the chart to determine whether we should buy or sell based on the 3 technical indicators. So looking at the chart, we can see that we're making highs, lower highs, lower highs. So it looks like the price is headed down. You can see here this drop here, the volume has actually been rising, so there's a lot more sellers here. In terms of the RSI is actually at the 29 level, so it's indicating very, very oversold conditions, and we should look to consider buying. So we can consider, but it looks like it's still dropping, so we want to kind of see if it's stabilizing. And also we look at the MACD, you can see that it's in negative momentum, and actually the negative momentum is increasing towards the downside. So looking at this chart based on the 3 technical indicators, it looks like Uber price is probably going to continue heading lower. Next chart that we'll take a look at is Tata Steel. And looking at this, you can see clearly the trend is heading up. And in fact, the volume is actually quite strong right here. So it looks like this stock is quite strong. So let's take a look at the RSI. The RSI is above 70, so it's quite overbought. So if you were to look to get in, wait for the price to kind of just go sideways so it can work off the RSI level. And also in terms of the momentum is quite positive. Now the only thing which is fine here is actually the momentum is slowing down, even though it's still upward momentum, but the upward momentum is slowing down, which is fine as long as the price here just basically goes sideways. So looking at this chart here, I would look to consider buying it, but not right now. Want to see the RSI levels much lower, and if it can kind of just go sideways a bit, and as long as the momentum is still positive, I would look to get in. So at this point, the price probably is going to go higher. The last chart that I'm going to take a look at is PepsiCo, which is Pepsi. So let's take a look at the indicators. So you can see here that the price is actually quite strong. Stock price is very, very strong. It's slowing down here. Volume is kind of flat. It's not too much volume, so it doesn't really tell us too much here. RSI is telling us that it's overbought. So looks like price have risen quite sharply. It's now kind of resting. So overbought, and the key thing here is the MACD. It was in positive momentum or upward momentum, and you can see here the upward momentum is actually declining, and now you can see red. You can see actually start to head towards downward momentum. So what I would probably see is that if you are in this stock, most likely it's time to take profits. It's not ready to short just yet, mainly because we haven't broken any support levels. But looking at just purely these three technical indicators, I would be looking to sell PepsiCo. Thanks for watching. If you like this video and want to watch other videos where I show you all the tools that I use on a daily basis to analyze the financial markets, please click on the left for more videos and click on the right for the full playlist. I'll see you in the next video.